Hi, it's David here with Futures Trading. I gave you guys some information on yesterday. We're going to take a quick look at it for 9:30. It's 9:27 right now. Give you a chance to look at the market right at 9:30. I haven't done this in a while, so let's do this for about, I don't know, about 10 minutes. So about 10, 15 minutes. I'll read it to you while, of course, the 9:30 is transpiring. And again, we're going to take a look at what that is. If you're in the market for additional information, I do provide that information there. That's what it looks like. Tons of videos here, tons of videos, except these here. That's an additional $100 if you want to view those. But overall, half price to get access to all these videos. I've traded live in each one of them. And again, this is what it looks like. Half price on the indicators as well as the private access there. You don't need it. Everything on the channel, you can absolutely get your trading to work for free. All right. I do encourage you to further your education, even if it's not with me. Please do so. All right. Don't pay the market and definitely don't pay them prop firms. I want to say that to you. Universal threshold. This is how far the live candle will pull back before price resumes. The price action trend. You just need to be able to count to 10, and that's that price action method. I use the majority principle in order to get this to work. And I'm going to show you three different ways it shows up in the chart. The universal chart scale. So that hard right edge, I teach you how to read your bezel so you can know that the market can become cyclical at any moment. On yesterday, I gave you guys some information on how to just stay out of that activity when they're doing this. And so here I tell you that when they pass a swing, okay, when they pass that swing there, they lift it up and they broke past it. If that midpoint, we're just using majority, if that midpoint can fall beneath the low of this swing here, this pivot, you just zone this out here, and it's a good chance that they could possibly respond. All right, so that's a way of going about it. And if you want to catch up on that, just take a look at the I'm gonna just kind of throw this here. I'm gonna just do that like that. You'll go and take a look at that video I made from yesterday. Now these are the levels from yesterday's threshold. So the threshold from yesterday's activity, we kind of fell down into it, kind of popped up, and this is the threshold from the daily on yesterday. All right, so that's the the threshold from the day before, that's there. All right, so I'll bring the daily back in just a moment, but that's the main thing you'll want to definitely check out. And again, these are those time ranges. You can use this information. You just want to stay beneath the mid of the time of the range or above it if you're bearish or bullish. Let's take a look at 9:30 real quick. It's about to come in, so let's take a peek at this and how it's going to work. Right now, they're in the lower part of the chart, all right, but they got this bullish activity off this bottom. So if they're going to go up without breaking the bottom, you're looking at them getting at least here. Now that's at the center of the chart, so it's really simple. It's nothing complicated about it. It can get there. Now, what it does when it get there, that'll be a whole nother issue. All right. Now they're doing it again. They got all, well, yeah, they got. Well, no, the wicks aren't. No, that's not there. But let's see what this looks like. And should they get there, which I suspect they will, that's saying that they'll get up here. Yeah, we got to go with the close. So wherever price can close at, we got the pressure firing off saying that the mid of this bar currently is above this bar's high. That's that diagram there. All right. And so then you project that they already made this pretty much. All right. They pretty much got that there. You don't need a lot of charts. I want to tell you that. Let's see. Let's see. Might have a little bit more to offer here. So let's do this. That's saying that they'll get there. Now the threshold, let me go with the threshold. Here's the wick zone. It didn't get all the way here. It didn't get there, but that's the wick zone. You don't want them back here on this one. Usually I go with the bar that's colored because that's the stop bar. Okay. But given we're so far away, we don't want them to take this bar out. We just don't, because they're so far away from this one. So we don't want that to happen. And everybody likes that fair value gap stuff. I don't, again, I don't do that. I've been trading for a very long time, and that's not necessary. You're a bar late if you use majority. All right. Majority principle states that the minority must follow. You have to make sure that you grasp that. And so that gap would automatically be there. All right, it's really simple. That's late. All right, been trading professionally for a very long time. That gap would absolutely show up if you allow majority to kick in. All right, now that's saying that they can possibly do it again. So let's see what that looks like. All right, so now we got this information here. Actually, let me grab this. All right, so now that's saying that they can get up to that zone, which is 72. All right, so let's take and do that. Let's go and get the zone and kind of project that forward if we can. Let's go find that zone first off. Let's go find it. Where is it at? Okay, let's project this forward and we'll be right back to that real time in just a moment. Trading is simple. It's not complicated. I can show you. Let's just do this. Do that. Let's just move it forward. See, can they land in that zone? All right. So now uh, they're above the center of the chart. Clearly, they're right here at the upper part of the chart. And again, we're taking our bezel. This is information that you can utilize that's in front of the candles. You don't have to look hindsight. You don't have to do that. I did put that zone there because I wanted to show you from yesterday's activity when you get price swings that are really overlapping, all right, and they're doing a lot of just back and forth, you got to ensure that those breaks are, substantial. So when they run past the pivot, okay, is that midpoint here? Is it beneath this pivot? No. Okay. That may not work from here, trying to sell it back down. All right. So let's see what they got. Okay, again, this bar, they're coming back through it. All right, so we got our threshold here on this bar. So let's just kind of do this and see if they can reach down in here, maybe take back off. It's still be above the center of your chart. All of this is provided when you get the indicator suite. So if you purchase the indicator suite, I give you, of course, templates, reference templates. You'll get one that's indicative of the one you're viewing now. You'll get a market analyzer, which is that red line. Let me bring that daily back for you really quickly here. You'll get that red line, okay, that's on the bar, red and green line. You'll get that information there. You can see on yesterday that they ran down and then they came off the low. And then, of course, today they're trading beneath it and they're coming back up. All right. Now, I told you guys in yesterday's video that they had a professional signature on that move when they was doing all of that back and forth. So it's not surprising that they had declined. All right. So they didn't make it to our threshold, maybe on this one, but yes, you get everything that you're seeing with the indicator suite. They may come back through this. We're down to 23 seconds. Let's see if they'll wick out here. If not, they definitely will come here. And that's what I really wanted them to do, is come here anyway. I want to go with the bar that has the color in it. It's really useful to do that because you want them to wick out in here and just take right back off, that hard stop back behind that bar and just, yeah, they're gonna finish through there. So hopefully they'll hit this and then come back up. All right, so this is not a trend up yet. All right, so we got 1, 2, 3, 4, 5. That's six, and they're getting there, but it's not one yet. All right, so we got 1, 2, 3, 4, 5, 6. They must close higher. That's the key. They all have to close higher than the prior. All right, it's really important. And of course, with yourself, when you have an idea, you have the end in mind. And so the trend, let's give a projection as to what that would look like. Now we're doing the bar thing, all right, but let's do the trend thing. Let's see if we can get an idea of what that'll be. All right, so we're going to go with this. All right, let's just kind of do this. All right, so I'm gonna say that the trend will be roughly this. All right, and we're going roughly because I would need them to close above this bar. So let's just do something to that effect there. And then we will take that same distance because, again, it's just like you and I. Whenever we have an idea, we have the end in mind. All right. Now I'm going just roughly here. All right. So that's saying they're going through the zone, going back above the threshold from yesterday, well, the day before yesterday, and that will put them up here at 26. All right. So that's 26. And this, again, right off the 930, which, again, the live videos, the lessons, all right, the lessons I'm saying, they come with me trading news, trading 930, all of that stuff. I do it right there for everyone to see. And that way you get a feel for how to use one contract at most volatile times. Go backwards clearly, okay, because you can go negative, but be able to come back using one contract, not sizing up because that's cheating. Use one contract, allow the information that you know to take you back to net positive as well as walk away with your goal. And I did that in all of those lessons, 10 hours of it. All right, so they hit the wick zone. They're kind of responding to this one here. All right, so they're responding to this zone here. Now, again, it's not a trend yet. I'm just kind of throw this here. They're responding to this one, but I suppose that they can probably get this to work. Let's see. They're still above the upper part of the chart. Now, keep in mind, this is all in front of the candles. Okay, so I want to teach you where it can become cyclical. So if it's going to fall back down, it should come off of it right here and then begin to decline again. You got your threshold here, you got your chart scale here. If it's going to decline, it's going to come back through here. All right, it's going to come back. Here it is. Don't make trading a challenging thing. Make it simple. Don't make it hard. It doesn't have to be. All right, so we've been watching this ever since they came in from down here, and it managed to hit both of these. It just haven't got to this one yet. It hasn't made it yet. It might. All right, you see it came off of the upper part of the chart, moved back down into the threshold, and now it's resuming. It's resuming back up. All right, so we only need one more bar. We're waiting for this to happen. And once this happens, I must go again. We're only 8 minutes into this. All right, so there's the bar value. The last bar had $480 in it. Now, you only need $99.21 a day to make, of course, $2,000 a month trading. So it's not required that you hold trades forever. Please don't do that. You don't have to do that. Be responsible. Take out a bar. Become a master at taking out one bar. If you can accomplish that, then you can do some damage. But the most important part is first you got to be able to take out one bar. It's only two on the board. There's a bullish one, a bearish one. You only have trending bars, non-trending bars. It's a combative environment, so they're fighting for a close. All right, and I want you to kind of keep that in mind. So try to grab one bar. It's really important that you get that one bar accomplished. Learn to do that. Become great at that. Okay. Now, once you nail being able to do that, then you can absolutely just do whatever you want with this stuff. All right. But you got to be able to nail getting at least one bar from the market. I'm gonna just put this here because they're still at this upper part of the chart here, and there's that threshold. I just really like thresholds on the colored bars. That's all. I like them a lot more. That's all. Just like them a lot more because I know this is the stop bar. You don't want them to pass the stop. Okay. So they came down here, they popped up, they're responding to this threshold here, which they kind of did this one too. Here's the tricky part with this one though. They went under the bar. Okay. Now that doesn't mean that that threshold isn't important. Okay. So let's put one there too. Let's put one there too. Right here. Okay. I know you kind of got a couple thresholds here, but you're watching all of this kind of play out. You see this threshold here, they ran the back of the bar. Okay, you can look up here in the upper left hand corner here and you'll see just that, the low, the L. 313.75. You got the low here, 313.50. So they ran that by a tick, but they managed to, of course, close back outside of that threshold. They can go higher. All right, so this is what majority looks like on the chart. All right, this is what it looks like. So we're getting the bigger wick, the larger wick, smaller wick effect. All right, we're getting that. We're getting the smaller body, larger body effect. All right, and that body can fit in there at least twice. That's important. And then, of course, you want the mid to exceed the prior bar. This is your wick zone. So you're looking for price to wick out in this area. Okay, you want them to wick out and then take off in either direction that you prefer to go. All right. So if you want to go up, you need them to get above the midpoint, need to get above the high. You would like to see them come down into that wick zone, and then let's go and get that distance that's projected. All right. So we would do this. Okay, we would do that and say, hey, go that far. I know the platform has an ATR in it. I want to say this to you. The ATR does not account for bar type, and it definitely doesn't account for what's happening outside of what you're seeing. There's an indicator that comes with my indicator suite that gives you an indicator that tells you where the bar is not likely to close. It's really important that you understand that. It's accounting for information that you're not currently seeing yet. That's important. It's really important that you understand that the market is producing information, all right, and they're privy to this information. The institutions, of course, all the different entities that operate within the market, they're aware of a lot of information that we're not. Okay, and I just want to say it in that way, and so they know how far they want to take price. All right, they have portfolios to manage, so they know exactly what they want to do. And so we need to make sure that we're aware of that as well in regards to it can go a certain distance as well as it cannot make it. That's important. All right. And knowing what that looks like is important. I can assure you. Now, they're using the upper part of the chart just to, of course, take off from there. And again, once they make it here, I'm gone. But that zone, let me go and get that for you so you can see that. All right. So that information there, because we went over this. Let me see. Can I grab this chart? Let's see. Can I grab it? We went over this yesterday, how to take that projection there, how to get that projection and measure it, okay, to know that they're up here. Now these ranges, all right, here they are. You can utilize this information. We just want them above the center of this range, and then of course, try to get outside of that range. Now they're about to run it and get there, but them swinging up the right here and then dropping down. Then this morning they raced up there, but they weren't able to make it. Now, of course, with them, pushing up like this, they shouldn't be able to sustain above this high to get that midpoint above there. All right. Now, if you come from back here, no, it's not going to work. So let's go midway. Let's go from where they stop. So they stop right here. In order to get that midpoint above that high, they would have to trade to here. So up here, they would have to trade up to here. And I'm gonna be generous. I'm not gonna be generous. I'm gonna say right here. All right. So they would need to trade to at least here. See, most of you, it may have went over your head what that is. All right. They would need to trade to here without really giving back in order to get that midpoint above this swing. All right. I don't know if that's going to happen. All right. So I'm trying to show you how you can. Now let's get this little pause that they did. Right. Now, if they can just proceed just a bit more, which I suppose that they can do that. All right. I suppose that they can do that. Yes, yes, yes. Close somewhere up here. Okay. We're trying to get them to close somewhere up here to get the majority read on this. All right. So we just want them. Okay. Now I'm going to go into the other chart to show you this too. We just need them somewhere in this area right here. And that would say to some degree, okay, we would want them to lean over and possibly here. All right. So if there's different ways you want to grab this or possibly get out of it. Okay. So we're talking countering the market. So if you want to counter the market and step in front of it, which I don't suggest, I'm trying to show you how to actually go with these guys. Go with them, go with them, go with them. Remember, majority, the minority follows the majority, right? The minority follows the majority. So we're the minority. We don't have enough money to push the market around wherever we so decide. We don't have that. And so what we have to do, we have to attach ourselves to those that can and agree with them. And so it wouldn't make sense. Let me just move this out the way so we can look at the price activity. It wouldn't make sense to try to trade against what's established. All right. If they're already in that direction, it just wouldn't make sense to try to trade against it. All right. Now, let's see, where's our trend? Okay, so our trend, I want to make sure that that's there. Okay, so we're at 1, 2, we needed them to close above here, so I wasn't too far off. Let's do this. All right, so we're going to do this. I'm going to just put this here. Okay. All right, so you don't want to trade against these guys. You want to agree. You want to be in agreement with them about what can take place. All right, so let me just do this. All right, now, again, I'm not going to hold the video any longer. Not going to hold it any longer. All right, so based on yesterday's information, I want you to be able to look at the chart very objectively, see the opportunities. It's really important that you're able to do that. And definitely, like I said, at 9:30, it does the same thing. I wish you all the best with your trading. Take care.